Hey guys, welcome back. Today we're going to be talking about some of the mistakes that many people make that make them some of the most horrible investors when it comes to investing in the stock market. And we're going to get right into it. The first one is lack of knowledge. Anyone who decides to invest in the stock market has to have some basic knowledge about what the stock market is, how it functions, how it operates, what a stock is, what an index fund is, what an ETF is, how to buy stocks, how to sell them, etc. If you don't have any basic knowledge about how the market works and you just decide to invest your money anyway, I guarantee you, you will lose your money and it will be your own fault. You work too hard for your money to be wasting it away like this on the stock market without knowing exactly what you're doing. So before you even think about investing in the stock market, take some time and learn about the basics. There are plenty of resources online. If you go to investor.gov, for example, you can find plenty of information about investing in the stock market, what securities are, what stocks are, etc. So I strongly recommend that you do that prior to even thinking about investing in the stock market. So let's say you have a job, you have regular income, and you have the money to invest in the stock market, and you have the basic knowledge about how the market works. Now, you can't just jump into investing without having any expectation. That is the second mistake that most people that are investing in the stock market for the first time make. You need to know what you're investing for. You can't just be putting money in the market expecting to multiply your money when you have no goals, you have no plans, you have no expectations. You don't know what to expect in terms of returns. You don't know what to expect in terms of market volatility. You need to be able to know why you're investing. What is your time horizon for investing? Are you investing over the next 5 years, 10 years, or the next couple decades? How much in terms of return on investment can you reasonably expect to receive from the market? You need to be able to know all of this ahead of time so that you can create the right plan, the right strategy, and know exactly how much money you need to be investing in the stock market. Now that leads us to the third mistake that many people make that cause them to be horrible investors. They have no plan and no strategy. How do you plan on investing? Where are the funds coming from? What accounts are they coming from? How often are you going to be investing? Is it going to be bi-weekly when you get paid? Is it going to be monthly? Are you self-employed? Is it going to depend on when you get paid as a self-employed person after you've rendered your services? Do you plan on dollar cost averaging into the market, which is when you invest the same amount of money into the same investments over an extended period of time? Do you plan on investing to be able to buy a house in 5 to 10 years, or are you investing for retirement? Or are you investing for your kids' college education? You need to know all of this before you invest, because if you're going in blindly, I guarantee you, you will be making irrational decisions and you will lose your money. The stock market is a market that allows us to make money, to multiply our money by investing it, by putting our money to work. It is not a game to be played with. It's serious business. If you approach it as if it's a game that you're just gonna play with, I'm telling you right now, you will inevitably lose your money. Whatever the plan, whatever the strategy is, make sure that you have all of that well thought out before you implement that strategy by beginning to invest. Because you need to know, what are you investing in? Are you going to be investing in individual stocks? Or are you going to be investing in the exchange traded funds? Or are you going to be investing in index funds? Or are you going to be buying bonds? All of these are terms that you should be familiar with before you begin to invest. Now, the fourth mistake that way too many people make, particularly if they are investing for the first time, is that they end up taking too much risk when they're investing. When you're investing, you need to know how risk averse you are. How comfortable are you when it comes to taking risk? How much risk can you take, or how much risk are you willing to take and still be able to sleep at night? So basically, you need to be able to properly assess risk. How risky is this type of investment as compared to that one? Do you want to invest in individual stocks, for example? Are you fine with being subject to market risk and company-specific risk when you're investing in one particular company's stocks? Or do you want to diversify that risk by investing in an ETF, which is an exchange-traded fund, which is comprised of many different companies? Or it can be different sectors in the economy. It could be the technology sector, or the pharmaceutical sector, or the healthcare sector. Or even invest in an index fund or an exchange-traded fund that has virtually all of the US companies in them, or that has combinations of US companies or international companies, or strictly US companies that have international exposure in the stock market. If you are able to determine how comfortable you are with taking risks, you will be able to figure all of this out. However, if you are not, you may be taking on way too much risk that you're able to personally handle. And that is definitely not a good way to look at investing, and certainly not a good way to invest. And the fifth and last reason why most people end up being horrible investors in the stock market is that they take bad advice. Now, just like there's a lot of good advice out there, there's a lot of bad advice. If you are arbitrarily taking investment advice from family members, friends, co-workers, simply because they told you that they're investing in this cool stock or they made money on this particular investment, then you're basically asking for trouble. You're volunteering to lose your money. Why is that? It's because anytime you invest, you need to be able to understand your investment. You cannot and should not invest in anything that you do not fully understand. You need to be able to do your own research, your own due diligence to ensure that the investments that you're about to make is sound. Particularly if you are young and you're investing for the first time, you are exposed to so much information on social media, and it can be good and bad information, but you don't know which is what. So you will find a lot of people taking investment advice off of what someone said on social media, buying stocks simply because this is a cool stock that is trending online. I'm telling you this, and take this as fair warning. If this is the approach that you're taking when you're thinking about investing in the stock market, you may as well not invest at all, because you will be losing your money. And frankly, your money will be safer sitting in a savings account despite having inflation eating away at your purchasing power. This is how serious that is. If you're planning on investing in the stock market, you have to make sure that you have an emergency fund set up. And I always push for that, to have an emergency fund set up. Any extra money outside of your emergency fund should be invested. But if you are going to be taking risks and investing your money left and right without a care in the world, getting random information from people on social media, from friends or family or coworkers who may not even know what they're doing, you might as well leave your entire money in a savings account instead of investing it. Because more likely than not, you will lose your money. You will be timing the market, deciding when to buy, when to sell. You will be panic selling whenever there's the slightest crash. Your buying and selling decisions will be solely based on what the other people that you're following are doing, and they will not be based on your own research and your own conviction in the investments that you've put your money into. So that's it. Before you invest in the stock market, make sure you have at least the basic knowledge regarding the market, how the market works, and make sure that you know what your expectations are. Make sure that you have a plan and strategy in place prior to implementing them. Make sure that you know how risk averse you are so that you're not taking way too much risk than you can handle and potentially lose your money as a result. And make sure that you're doing your own research and your own due diligence, and that you're not just taking random advice from other people, buying when they're buying and selling when they're selling, even though it may not be in your best interest. And remember, if you're investing for the long term, it's best to use the buy and hold strategy and continuously, without miss, buy more of your chosen investments, whether the market is going up or it's going down, whether there's a crash, whether there's a recession, or whether there's another great recession. Now, if you didn't get a chance to like and subscribe, I would really appreciate it if you like this video and subscribe to the channel. Please like, subscribe, and share with family and friends. I'll see you next time. Have a good one.